Hello, good evening, and welcome to this webinar on anti-money laundering and counter-terrorism financing from ACCA. We're very glad to welcome all of you here. Sorry about the slight delay in starting the webinar, about 5 minutes. We're running back-to-back sessions in multiple cities. We just came through our uh, new member certificate distribution event. But we're very glad to bring this very important, very topical subject to you. Um, and we have an expert, Mr. Junaid Yunus Ghori, sitting with us, a fellow ACCA member and an expert on the subject. Junaid currently works at SECP and has attended various qualifications in addition to ACCA. He's an expert in Islamic finance also, and has been to Australia to a university for further qualification. So, Junaid, for a detailed introduction of yours, if I can hand over to you and then you can take it on from there. Just some housekeeping. Number one, the session will go on till about 6:45, and we have set aside time for question and answers. So keep noting down your questions or keep sending us your questions. But during the question answer session only, we will start taking them up one by one and we'll then run through the questions. Regarding the presentation that is being shared, the PDF version of the presentation has been uploaded as a handout. You can download it yourself. So if you can go to the GoToWebinar menu, there's a handouts option there which says 1 of 5. So you can click there, look at the file that is available, you can download it. I hope we will enjoy this very interactive session, very topical one. Regarding certificates, the resources of this webinar and the recording, the certificates will reach you within 2 to 3 days after the session. Any queries about your certificates or all, you can contact me directly or you can write me email at members.pk@accglobal.com. Thank you very much, and over to Mr. Junaid. Junaid, over to you.
Thank you, Arun. Let me start with my brief introduction. Thanks for the introduction primarily, but let me have mine as well. My name is Mohammad Junaid Yunus Ghori. I'm a fellow member of ACCA, a chartered accountant from ICAW. I'm also a chartered banker from Chartered Institute of Bankers, Scotland. Chartered Islamic Finance professional as well from the Chartered Institute of Islamic Finance, Malaysia, and have done a Master's in Finance from the University of New South Wales, Australia. I have almost over 20 years of experience in the financial sector, and presently I'm working with the Securities Exchange Commission of Pakistan. Our today's topic will be discussing about the international policy initiatives that have been taken to combat this money laundering and terrorism financing. We'll be discussing about the FATF's 40+9 recommendations which have been recommended to the countries worldwide to curb this menace. And then we'll be taking an account of our local perspective, the local current scenario, what's happening in Pakistan, what's the grey list, what are the sanctions and implications for those. And briefly about the money laundering process, the financing terrorism, how it's been done, and the significance for the financial sector and for the finance professionals in particular. And we'll be discussing the trade-based money laundering as well, and we're having a brief of the regulations which are in place. So to begin with, let's see what are the, let me share with you that the United Nations Drugs and Crime Unit, they have estimated the money laundering, the global money laundering as around 5% of the global GDP, which amounts to almost $2 trillion. So it's hell of an amount which is being laundered in illegal wealth, in fact. So it's not a local phenomena, it's not a regional or a jurisdictional matter, it's a global problem, it's a global menace. So there are global responses, there are international responses to money laundering, how to combat it and how to put it, to rest. So let me share with you the very basics. In 1988, the UN Convention Against Illicit Traffic in Narcotic Drugs and Psychotropic Substances, it's popularly called as Vienna Convention. It urges its signatories to establish primarily the money laundering as a criminal offense in relation to the drug money primarily, and then enact legislation to identify, trace, seize, and forfeit the proceeds of drug trafficking. Implement measures to combat this money laundering, including the drug money as well. So money laundering, and also to declare this money laundering as an extraditable offense. So this was the primarily international response to combat this menace. It did happen because of the large-scale drug abuse. I mean, this inculcated governments worldwide to act against these drug dealers primarily. And then, obviously, the legislation it has been implemented to seize the proceeds of crime and then to combat this money laundering altogether. Then there came things like human trafficking and weapons smuggling as well, which was also taken into account. Then there is, in 1990, there was a convention on laundering, search, seizure, and confiscation of the proceeds of crime. It's called a Strasbourg Convention. Then in 2000, the United Nations Convention Against Transnational Organized Crime, it's called Palermo Convention, which requires signatory nations to criminalize the money laundering. And to set up a comprehensive domestic regime to combat money laundering, including customer identification and suspicious activity reporting. Then in 2005, the United Nations Convention Against Corruption, which is also the Merida Convention, which criminalizes the laundering of proceeds of corruption and addresses the tracing, freezing, seizure, and confiscation of the proceeds of corruption. Then there are other international organizations, particularly dealing with this money laundering function. The Basel Committee on Banking Supervision, this is the committee established within the Bank of International Settlements. It has, among other things, it also caters to the money laundering issue as well. Then the Global Watchdog, which is the Financial Action Task Force, it's formed in 1989. And there are a couple of other FATF style bodies, which was, like Asia Pacific Group on Money Laundering, of which Pakistan is also a member. The Wolfsburg Group formed in 2000, and the Egmont Group it's just a unit of financial intelligence units. It's a group of the financial intelligence units established to combat this crime. We have other international bodies like that of United Nations Office on Drug and Crime. It has a global program against money laundering. The IMF itself, the World Bank, the Asian Development Bank, all of these institutions, these multilateral institutions, have the money laundering agenda on their top of the list, in fact. So let me share with you one of the chief forces which is dealing with this money laundering and all the activities associated with it. It's the Financial Action Task Force. Financial Action Task Force was formed in 1989 by the 7 major industrial democracies. It's an independent intergovernmental body that develops and promotes the policies to protect the global financial system against money laundering and terrorist financing. Its mandate was further extended to cover the financing for terrorism as well in the year 2001. In the year 2008, FATF mandate was further widened to include other emerging threats, particularly the proliferation financing, the weapons, particularly the weapons proliferation and other things that's being financed through this money laundering as well. The objectives of FATF are it sets the standards and promotes effective implementation for the legal, regulatory, and operational measures for combating money laundering, terrorist financing, and other threats to the integrity of the international financial system. The FATF is a policy-making body which works to generate the political will to bring about national, legislative, and regulatory reforms to combat the money laundering and terrorist financing. Predominantly, it examines the methods, techniques, and the trends in money laundering and terrorist financing to ensure the continued relevance of its policies and standards. So far, It has 38 members, including the 2 regional organizations. And its standards have been endorsed by over 170 jurisdictions worldwide. FATF has developed a number of recommendations, almost 49 recommendations, and these recommendations are recognized as the international standards for combating the money laundering and the financing of terrorism and proliferation of weapons of mass destruction as well. So the money which is being laundered is also used to finance the terrorism as well as in the purchase of weapons, and the weapons being used for the further mass destruction. So it's been including the domain of this FATF. It's issued the 40 recommendations. The first issued in April 1990. The FATF recommendations were revised in the years 96, 2001, 2003, and recently in 2012 as well. The purpose primarily is to remain updated to and be relevant, keeping in with the developments worldwide, the technological developments, the political developments, and economic developments. So they are intended to be the universal application and a comprehensive plan to fight the money laundering. These recommendations are not binding on any member. These are just non-binding international agreements. The countries have flexibility in the implementation of these recommendations. Let me share a brief about these recommendations. The recommendation 1 to 3, the 3 recommendations, they primarily deal with the legal side of the things, that how the member bodies is to legislate, how to ensure that the money laundering remains an offense, and the assets and the money shall be subject to confiscation. The regulation 4 up till 25, they are the financial and regulatory. They cover the financial regulatory side. I mean, it's more of the implementation side, implementation of the procedures. That's how to ensure that the financial institutions identify and keep on reporting the suspicious transactions that they come across, I mean, during the course of their operations. Then we have Regulation 26 till 34, which primarily deals with the law enforcement and the role of the law enforcement agencies to combat this crime. So they, I mean, ensure that they should provide assistance to the member countries in regard to the investigations, prosecution, and extradition matters. In fact. And then there are 5 more recommendations from R35 to 40, which deal with the international cooperation, how the countries should cooperate among themselves, how rapidly, constructively, effectively they will provide the widest possible range of mutual legal assistance in relation to the money laundering and terrorism financing related investigations, prosecutions, and related proceedings. In addition to these 40 recommendations, there are 5 special recommendations which have been enforced on the premise of this United Nations International Convention for Suppression of the Financing of Terrorism. So these come in the aftermath of this particular convention, which these are 8 special recommendations. They cover the terrorism financing particularly, and they are issued in October 2001. The special recommendation 9, which was issued in 2004, it relates to the cash couriers, how the financial institution, financial system deals with the cash couriers. So these are in total 49 recommendations thus far, and they cater to the money laundering, terrorism financing, and now, I mean, the cash couriers as well. Now let's come to our particular jurisdiction, Pakistan, where Pakistan is, what we have with the money laundering. I mean, what is our status? Pakistan is presently on the Improving Global Anti-Money Laundering Compliance List, which is known as the Grey List. The list comprises of the jurisdictions which have strategic deficiencies in AML and CFT related, for which they have developed an action plan with the FATF. FATF gives an action plan to all those jurisdictions which have serious deficiencies in the AML and CFT programs. So it develops a certain action plan to correct the things. It's a 26-point action plan which is being designed and spanning a period of 15 months to avoid being blacklisted by the Financial Action Task Force. I mean, if we don't comply with the plan that's been given, we may be blacklisted. I'll discuss what would be the implications for being blacklisted as well. So this is the plan that the International Cooperation Review Group of Asia Pacific Group submitted to the FATF plenary, which requires the Pakistani authorities to proactively cooperate with the counterpart bilateral agencies. In the last year, February 2018, the FATF approved the nomination of Pakistan for monitoring under the International Cooperation Review Group, ICRG, which is commonly known as the Grey List. So in February 2018, Pakistan was placed in the Grey List. So what are the four? They have done it subject to 4 key areas which have been identified by the ICRG, which is an extended. The Asia Pacific Group of the ICRG of APG identified 4 basic areas, the 4 key areas of concern. Firstly, the deficiencies in the supervision of AML and counter-financing terrorism regime. This is the deficiencies. Then cross-border illicit movement of the currency by terrorist groups. This was another area of concern. And then progress on terrorism financing investigation and prosecution. And fourthly, the implementation of the United Nations Security Council resolutions on, these are 1267 and 1373, which primarily deal with the terrorism financing. So these were the 4 key areas which were considered by the APG to, put Pakistan into the grey list. Let me share with you, this is in June 2018. You can see the jurisdictions which have strategic deficiencies, they are placed in the grey list, and we have on the right side Iraq and Venezuela. These 2 countries have now been blacklisted, on this day. So we'll see, by placing Pakistan alongside this Iraq or this, you can see the global impression that you'll be having. Let me share, this has been taken very seriously. Government has taken a couple of measures. I'm just sharing with you this some of the reports which have been published in the media as well. The government has approved fresh measures to avoid being blacklisted by an interest group. That one is money laundering, terrorism, a trial of officials to APMs. So the Paris-based FATF placed Pakistan on the grey list earlier this year, but gave it time to take action before a further downgrade. So you have sufficient time to correct things. Pakistan has been given a sufficient time and has been given a plan to act upon that in order to being avoided as being blacklisted. So, you can see there are a couple of other measures which has been taken. A body has been formed to coordinate efforts to combat this money laundering, terrorism financing in the light of recommendations made by the FATF. An intergovernmental body has been formed in Pakistan to coordinate the efforts against the menace. Then FATF Actions Plan report identifies primary sources of. So there are, it's a terrorism financial risk assessment report which is being made by the local are on part the force which is being made. So they have identified a couple of primary sources of terrorism financing. We have roots in Pakistan, across the borders as well. The report also says there are hostile agencies are fueling terrorism in Pakistan, providing funding to the subnational terrorist groups. It identifies foreign funding, drug trafficking, kidnapping for ransom, extortion, robbery, and bank heist as primary sources of funding in Pakistan. So this report has been prepared as part of the implementation plan on the 27-point action plan that the FATF handed over to Pakistan as a prerequisite to exit from this grey list primarily. This NEC, the National Executive Committee, which is a high-powered committee, approved the terrorism risk assessment report, and the official said that FATF review in 2019, which is likely to be happening in May 2019, would prove quite critical for Pakistan, as the country would have to demonstrate compliance with regards to the effective enforcement and prosecution against terror networks and foiling their financial linkages. We can see a number of legal developments happening in Pakistan as well. You can see that the Supreme Court directed the National Bank of Pakistan to file a case against the Omni Group in a fake and money laundering case. Fake accounts were maintained with the National Bank, and thereafter JIT is formed. The JIT has submitted its report as well. So these are other developments being happening on the legal side, on legal front. Then we have other implications that IMF generally has linked its Pakistan's bailout plan to the FATF grey list as well. If a country earned a rating on FATF blacklist, the IMF will not consider it for any financial support. So this may be one of the implications that, I mean, if you will won't get the dire financial support, I mean, to support your balance payments, so we will be in hot waters then. So recently, they have also been made it imperative that the FATF clearance is a must for any IMF facility, financial facility that IMF is conditional upon FATF clearance. So, I mean, just to conclude, I mean, the FATF has certain tight deadlines. I mean, we have to comply with these. The recently held FATF meeting in Sydney, they did appreciate a number of things being done by Pakistan, but still there's a lot more to done, and it's being generally related to terrorism financing. On the money laundering side, as far as the financial sector's regulation side is concerned, they seem to be pretty comfortable, but there's still terrorism side which needs to have a great focus. Now, what are the implications of FATF sanction? What would happen to us, our economy, our country, our businesses, if we do get a further downgrade, if we get a blacklist? I mean, so what would happen? Being a sovereign country, primarily we'll get a ratings downgrade. Our sovereign ratings will drop. In the eyes, obviously, in the eyes of the international world for any investment. What would happen? Secondly, we'll get our financing costlier. Wherever we'll be seeking financing, it will get costlier because the financer will be having a greater risk for investing, for funding to Pakistan, to any country which gets his nomination in the blacklist, in fact. Then the investors who intend to invest or who might be eyeing to invest in Pakistan, they obviously would get scared predominantly because of this very rating. Then our businesses, our people, our professionals, everything would be subject to the greatest and increased scrutiny. Your transaction time will increase, your scrutiny will increase, you have to have arranged more guarantees internationally, the guarantees itself, the price of the guarantees in fact will increase. What would happen? Your importers are likely to pay more, your exporters are likely to experience further difficulties in exporting and exporting their goods to the world, in fact. So it may impair your trade deficit further and your dwindling forex reserves. I mean, it will be denting those as well. Then in the trade side, for the financial institutions itself will become more incompetitive vis-a-vis other international financial institutions. They'll be having to pay more cost for getting their LCs, the letter of credit or trade contracts confirmation, to the international financial partners. And they are likely to experience more charges, more cost in their corresponding banking relationships. So these are a few implications that we may experience, I mean, if we are being blacklisted or by FATF. I mean, other things, there are, I mean, host of other things which may be applicable. I mean, the economy may, your overall economy may slide downwards, your stock market and other things. I mean, because everything is interconnected. So the entire business and financial sectors could be facing a certain dent if FATF declares Pakistan on its blacklist. Now let's move to the thing that what money laundering is. I mean, what is money laundering? How do we see it? Money laundering is basically the cleansing of proceeds. Whatever is generated from drug trafficking, people smuggling, arms, antique gold smuggling, pornography, prostitution, trade frauds, financial frauds, corruption, kickbacks, or illegal sale or purchase of products, and other offenses, whatever they may be. I mean, the list, you cannot just enumerate a list right here. But these are the general things, I mean, where from the proceeds, any proceeds which are being generated illegally. The money laundering is a process whereby this illegally ill-gotten wealth is cleaned. It's processed by the proceeds of crime and their ownership is concealed or presented as from legitimate sources. So what happens with the concealing the existence, illegal source or illegal application of ill-gotten wealth to make it appear legitimate. These processes used by the wrongdoers to make dirty money appear clean, or profits of criminal activities or to appear legitimate. These money launderers, they operate through international networks. In earlier times, we used to have the gangs of robbers, the gangs of criminals who used to operate. Now it has become a more sophisticated crime. The money launderers have now a very sophisticated international networks whereby they, launder the money without disclosing their identity. And these money launderers have enormous financial power. And they can bribe the people, they can curse the people, they can engage, and they can do whatever they like with the power of their wealth under their control. They may use professionals to create legal structures and entities to hide behind these frontmen, and they also create shell entities whereby they do launder these proceeds. So it's the cleansing of proceeds of crime primarily. There are 3 stages of this: the placement of the proceeds derived from the location of illegal source or activities, and in the movement of proceeds, currency changes from the scene of the crime to a place or into a form less suspicious or more convenient for the criminal facilitating its access. So in this first stage, the funds are placed into the financial system, away from the place where they have been earned or been derived, in fact. The second stage then becomes the layering of the transaction. It's been done to use a number of complex transactions which are designed to obscure the money trail, in fact, to hide the proceeds and to hide their trail, where from the funds are derived, where they're investing. So the criminals use shell companies, offshore banks, and territories with lenient regulations. Those jurisdictions which have where the money laundering laws are very weak, or those will have secrecy laws as well, where the investors are protected. The secrecy and the confidential information is not leaked. The third stage is the integration process. Primarily a person who is a resident of a place, he is generally intending to use the proceeds at the same place where he's presumably residing, in fact. So this stage is the bringing in back the funds from the financial system back to the place where these funds were generated. So that enable the person to present it as a legitimate earnings, a legitimate source being derived from the legitimate sources. There are numerous techniques. There are so many techniques of this integration that we cannot just describe a few, in fact. So it starts from the false documentation in the invoices for exports, imports, financing, loan against a foreign deposit, purchasing property, establishing shell companies, and commingling of the money in the banking account. So there are different ways, different procedures by which these launderers just bring the money back to the place where these were actually earned and where the launderer wants to use it, in fact. So simply grammatically, you can see it's a first stage is the placement. Illegal funds or assets are first brought into the financial system. Then there are complex transactions done within the financial system. The financial institutions, the banks, financial institutions are used by the criminals to make complex transactions to hide the origination of the funds and to disguise their origin, in fact. And finally, the integration stage where the funds are brought in back to the financial system or to being made available to the launderer, whereby it can use it as being an apparently legitimate funds. The typical process whereby funds are placed in the bank, then through the transaction, and it's the same one, right? Okay, let's move to the techniques. The quick simple things, widely known techniques. There are people as against the criminal gangs we used to have. Now we have syndicates of organized criminals, the sophisticated criminals, the criminals having more knowledge of the things, more knowledge of the technology, and they help, and they are gangs of, I mean, they are the people who help the launderers to make this laundering transactions and to help the launderers, in fact. So these are dedicated syndicates. I mean, this crime is not organized. The process is done, I mean, the transactions are structured in a way that the system cannot detect those transactions. I mean, you just break the bigger transactions, bigger amounts into the smaller ones, and you just try to escape the eye of the law, in fact. So the smurfs, these are highly intelligent people. They just convert the big amounts into smaller amounts and do it in a different way, and just make it so many transactions. It's quite impossible. It becomes nearly impossible for the financial regulators, for the financial system to detect it. So there are a couple of techniques. Firstly is deposit structuring or smurfing, and there are, I mean, the second is connected accounts. There are different accounts used, I mean, one account to another, and I mean, the funds move through so many accounts, it becomes nearly impossible for the watchdog, for the financial managers to detect that to whom these funds belong to. Then wire transfers are, I mean, widely used, because three things which primarily matter in the money laundering is the value, the venue, and the volume. I mean, these three things, just keep the three words in mind, that the value, venue, and volume. So the greater the volume, obviously, you need the more velocity, the more speed to move the things away. And your venue, because you have to move things away from the venue from where they have been generated. So wire transfer is one such facility whereby you can move the funds far from the locations in seconds. Then there's another technique which is being used, that you just place a foreign currency elsewhere in the world, you get loan back into the country where you want it. So you may be placing your funds in Australia, America, or New Zealand, and you be getting a guarantee there against, and picking up a loan in Pakistan there against. So this is another technique. Then the more vulnerable businesses like exchange companies, the money changers, they have been used as a conduit for the money laundering, and they are being used quite widely. Now in Pakistan, these business exchanges have been brought to the regulatory net as well, but still, I mean, there are still informal sectors which do transmit money, which is hawala hundi system. Then there is secured credit cards. The secured credit cards, I mean, you just provide a collateral in the shape of funds, in the shape of property, in the shape of, and you get a credit card limit, which is an unlimited limit. You can have any, I mean, and those secured credit cards are used across the world for purchasing, for shopping, and for anything, for making the payments for and by the money launderers. The security sector and investment banking segments, they have also been used by the launderers because they have the capacity for greater volumes as well. Then insurance and collective investment schemes, yeah, they are being used. The companies trading and the business activity, there is a potential in the import-export business. I mean, you do have the potential for the over-invoicing, you do have the potential for the under-invoicing as well. And the correspondent banking relationships of the financial institutions, they have been used quite widely. These launderers, they do establish the shell banks, and those shell banks may get it. I mean, they make it possible to open account with one of the banking correspondents, and through that one account, they may get their funds transferred to other correspondent banks as well. Then we have a set of professionals like lawyers, accountants, other intermediaries, and not-for-profit organizations as well. The accountants and lawyers, obviously, because you people are providing your clients certain financial advice to, I mean, primarily not to escape tax, but to manage the taxation. But obviously, in that matter, in such services, there may be certain ethical barriers, and those and there are people, there are professionals who do cross those ethical boundaries, in fact. So the lawyers, accountants, they do enable this money laundering to a greater extent, and not-for-profit organizations, the organizations, the charitable funds, the charitable organizations, they are used in Pakistan as well, and that's where for laundering purposes. The terrorism financing. It's been learned, I mean, it's empirically that this money which funds the terrorism is also moved through the financial system. And the global financial system and its networks have been widely used by the criminals for, I mean, through the personal business accounts. I mean, it can be placed in the accounts of illegitimate charities and be laundered through buying and selling securities and other commodities and purchasing and cashing out of insurance policies as well. Terrorism financing primarily emanates from the very legitimate businesses, like to that of charitable donations being paid to ABC welfare organization, and that welfare organization, that charitable organization may have links, or that charitable organization or an institution being made by the launderers to enable them to launder their proceeds or to fund their terrorism-related activities. The terrorism is also different sorts. I mean, it's there are state-sponsored terrorism being done by a number of countries. We believe that India or Israel or so many other countries are being sponsoring these terrorism. Likewise, there are institutionalized and apparently legitimate sources. Primarily, the collection of membership dues, which is being used by organizations to hide the their actual purpose of using those funds, sale of publications, the culture, social events have been done to just generate the funds. The solicitation in the community in the garb of I mean, getting the donations, and making appeal to the wealthy members of the community for getting seeker larger amounts of donations, which obviously are being meant to fund their terrorist activities. The non-profit organization charities, obviously, there have been a number of frauds in the area, in almost locally as well as internationally as well. So these are the few things where from the funds are channelized to finance the terrorism as well. Then there are bribery, corruption, kickback, smuggling, fraud, including online tech and card frauds, which have been witnessed quite, I mean, internationally as well, locally as well. Then the terrorist groups, like they do have kidnapping, extortion, thefts, robberies, drug trafficking. So all these are illegitimate sources which ultimately end up into the financing of the terrorism as well. So what do we have? The money laundering, we can have economic and political impacts. As discussed earlier, that money laundering can impact on economic and political structure of the countries. A large amount of money laundering, I mean, it just removes the original, your actual financial system. I mean, your financial system comes to the control of the launderers, in fact. And you have economic and political implications for that. You may be experiencing the changing in your money demand, the prudential risk to the soundness of the financial system, banking financial system. So you get the contamination of legal financial transaction, increased volatility of international capital flows, exchange rates due to unanticipated cross-border asset transfers. So you can have, I mean, apart from the exchange rate movement to the, financial and capital flows, you may be having other financial woes as well. Socio-economic and by criminal organization, yeah, wielding, I mean, they have, I mean, control of the funds, so they can buy things, they have the power to influence things, they can weaken your social fabric, I mean, they just downgrade your overall ethical standards, and they may disturb your overall democratic institutions of the society as well. So organized crime infiltrate the financial institutions. The launderers can acquire control of the larger sectors of the economy through their investments. They may bribe with public officials. They may get the regulations and legislations approved in their favor. They may brought in certain governments in their favor. The foreign direct investments obviously has a dampening effect in such a case where countries' financial sectors are perceived to be under the control of criminals and this organized crime. And so the financial institution and predominantly the finance professionals being connected with the financial institutions, all of you being working in finance primarily, and your opinion, your decision matters a lot when you being dealing with the financial institutions. You being getting financial facilities from the banks and financial institutions, and you might be investing with them, and you're also being trading your companies, your institutions be trading with this organization, conducting import, having exports as well. So have particular significance for all of these financial. I mean, the regulatory and compliance is primarily for the financial institutions, and which may impact upon all those businesses would get this risk. Then these financial institutions have legal risk as well. They may be subject to the legal penalties, legal orders as well. The operation risk, I mean, large-scale money laundering and criminal professionals, criminal people, they may brought in certain risk operations to the financial systems, operational things, like to the systems and technologies, buying the people being doing frauds, and jeopardizing in fact the financial system. This financial risk, obviously, the bank may expose itself to great financial risk as well. The reputational risk as well. If a bank is known to be a place for the launderers and has facilitated the launderers, obviously it will get a reputational risk in the eyes of the general public as well. So all of these are generally interrelated as well, and together, obviously, they have far-reaching, serious consequences to the financial institutions as well as for the financial system. I just share with you a number of fines or sanctions which have been imposed. The monetary penalties and enforcements imposed by the global regulators around the world for financial institutions against violations of AML or KYC and sanctions there against. Over the past 10 years, regulators across North American, European, APAC regions have nearly issued $26 billion in AML and KYC and sanction-related fines. So it's a hell of a money. It's $26 billion. The United States has levied almost 91% of all global AML, KYC sanction-related fines from 2018 to 2018, totaling a sum of, say, $23.52 billion. Europe follows closely behind it with 1.7 billion issued in fines over the last 10-year period. 2018 has been a record year for the AML fines in the region, with a total of 903 million levied, including the highest European AML fine of the past decade, totaling 900 million, which was levied by the Dutch authorities. The Asia Pacific and Australian continent also, the AML-related fines totaling 609 million have been issued in the past 10 years. 2000 had added a new 10-year record for enforcement in the region, with nearly 541 million issued in fines within the first 8 months of the year. Cost in penalties to banks. HBL, we do have our local examples as well. Our bank, HBL, was also fined in the States with the US 630 million of fine, while it was settled at 225 million. So you can see the HBL profits in that year were 327 million. So you can see the amount which is being taken by the investors, by the stakeholders of the HBL. So it's a hell of a amount. It's quite a big amount. So these are the risks that the money laundering transactions may pose for the bank. And then there is we have an example of China as well, 6.1 million yuan, Bank of Communications, the Shanghai Pudong Development Bank, Ping An Bank. So all of these were jointly given a penalty of almost 6.1 million yuan. We have other examples like the death of ABN AMRO. It was fined, say, 80 million in 2006. Arab National Bank, 24 million in 2005. City National Bank, almost 750,000 US dollars. Riggs Bank with 41 million. AM South Bank, City Japan Bank, its license being cancelled. The Riggs Bank's also given another penalty of 25 million in the year 2004. The big banks like the BNP Paribas, they also had to pay, say 8.9 billion in penalties to settle its charges, concealed roughly 8.8 billion of the transaction with the countries like Sudan. So these are, when we talk of the money laundering and sanctions related to it, the risk, the legal risk, the sanctions related risk, the financial risk is always there, and no one has yet escaped. All bigger financial institutions, I'm just going to share other HSBC, it's also been given a fine of almost 1.3 billion in the year 2012. So I'll just be showing you a couple of other big banks and big groups like that of ING, 619 million penalty for allegedly moving billions of dollars on behalf of sanctioned Cuban and Iranian entities. So the federal authorities, the US authorities were of the view that this bank had moved 2 billion worth of transaction on behalf of those entities, the criminal entities. The Credit Suisse, it was also fined in December 2009, paid 536 million for the transactions on behalf of customers. So among other things, the law enforcement officials at Credit Suisse trained its Iranian clients to falsify wire transfers so that those messages would not be hampered by filters at the US financial institutions. So what we were talking about earlier was that these wire transfers were and are used to launder the proceeds, in fact. So the Credit Suisse more recently agreed to 2.6 billion in settlement with the tax fraud charges as well. The Lloyds Bank of the UK, it was also asked to pay a 300 million fine, 350 million fine in January 2009. Obviously, and also related to transactions with Iranian customers, law enforcement officials said the transactions allowed more than 350 million to be processed by US correspondent banks that otherwise might have been blocked or rejected. So these correspondent banking channels or links were used to transfer the proceeds from one bank to the other bank. Then Barclays also paid $298 million in penalty in 2010 for at least stripping wire transfer for customers in Cuba, Iran, and elsewhere. Standard Chartered in 2012 paid $225 million for removing information from wire transfers. FINRA, the Financial Industry Regulatory Authority, fined Morgan Stanley 10 million for the deficiencies in its anti-money laundering program. The prevention of money laundering became a high priority for the regulators, a fact FINRA underlined by announcing the penalty against Morgan Stanley. FINRA continues to find problems with the adequacy of some firms' overall AML programs, including allocation of AML monitoring responsibility, data integrity, and automated surveillance systems, and firm resources for AML programs. So you see that your financial risk is connected with your operational risk, and you have to take certain operational measures to report upon these transactions. Then European Commission further, the Brussels seeking tougher European level enforcement even after a spate of scandals that have shaken faith in the bloc's ability to keep dirty money out of its financial system. So this phenomena is being recognized and being experienced across, the developed world as well as with the developing and the non-developed world as well. The FinCEN, which is the Financial Crimes and Enforcement Network, securities regulators assessed the AML penalty against UBS trading firm. The US regulator disclosed 14.5 million penalty against the New Jersey-based broker dealer of the Swiss bank UBS for not capturing critical information on billions of dollars. So it's, the operational risk which has been transmitted into financial risk. In fact, primarily they're fined for not capturing this information from. Their systems were insufficient, who did not support the reporting of these these transactions primarily. Commonwealth across Australia, I mean, the Commonwealth Australia was also accused of 53,700 breaches of money laundering laws by the Australia Financial Intelligence and Regulatory Agency. Austrac alleges Commonwealth seriously and systematically breached compliance of anti-money laundering and counter-financing terrorism as a technique, and this has been used as a cuckoo smurfing, which we discussed earlier. Then let's move on to the trade-based money laundering. How do we have money laundering in trade-based transactions? The launderer used import channels. They enter into import contracts and they do over-invoice the transaction. I mean, instead of say $100, they declare or they put an invoice of $200. The $1,000 is moved away outside the country to support the launderer. Likewise, in exports as well, we experience the under-invoicing. I mean, you are exporting the goods of more value than what proceeds you are getting into the country. So these are two primary means in the trade used by the launderers who come to this trade side in the garb of a legitimate businessman, and they do this over-invoicing and under-invoicing. So these, for the financial institutions, enabling the letter of credits and letter of guarantees, these import exporters always remain a high-risk customers for them as far as this money laundering is concerned. Then we have the correspondent banking, as discussed earlier, that the shell banks, through different schemes, they become successful in opening an account with the correspondent bank, one of the correspondent banks, and through the correspondent banking channels, they get access to different banks. Once an account is opened with one correspondent bank, you just can transfer the funds across all the banks with which it has its agency relations. So in this case, a shell bank is prepared, open, and it just opens one account with the correspondent bank. And once it is done, it provides a way to the launderers to move their proceeds elsewhere. The nesting is another form of laundering. It refers to the practice among the foreign financial institutions conducting international transactions, allowing one foreign bank to process the cross-border transactions of another foreign bank through its correspondent accounts. This is how, I mean, a shell bank establishes its relation with the correspondent bank, and through the agency relationships amongst the banks, the funds are moved. So nesting is this technique by which a shell bank, a launderer's bank, gets its account open or relation established with the correspondent bank. So the financial institutions predominantly are being used as a conduit for money laundering. They have been subject to more surveillance, more regulation. They've been asked to improve upon their relationship establishment exercise. They have to establish a know your customer policy, and they have to have a customer due diligence on an ongoing basis as well as at the time of opening an account. So while establishing business relationships, opening accounts, the beneficiary of accounts, who is the beneficiary, you have to establish, the financial institution is to establish who are the ultimate beneficiaries of the account. It's being maintained by the intermediaries, and the risks through one-off transaction. I mean, what are the risks of one-off transaction? Person comes to the bank and submits cash to you for transfer, for issuance of demand draft, or for transmission of money. So this also poses a risk. So the banks need to have sufficient information of all those who come into contact with the financial institution. So you have to establish, the financial institution has to establish the true identity and the beneficial ownership of all the accounts and persons with whom they come into contact during the course of their banking business. State Bank of Pakistan has taken a new advanced measure that all accounts have to be, I mean, they're now being established a biometric verification of all bank accounts. Obviously, it will help improve the control of financial crime, as the banks can be potentially risky customers from their books. Technology there, I mean, it's being used because once you have, we have witnessed in this saga of our AML JIT that in the opening room as well, that a number of people opened accounts, and those accounts were funded with billions therein, but but it has nothing to do with the real economic substance of the person holding that account, in fact. So one such measure obviously is that the person is to come personally, or you have to provide a biometric verification to the bank while opening an account, or for all accounts which have been established by now. So by 30th June, State Bank has all the banks to get their accounts biometric verification, to get the biometric verification for all the customers of the banking segment. The bankers, the banking community, the financial institutions shall make reasonable efforts to determine the true identity and beneficial ownership of accounts as a part of their KYC and CDD policy. They have to find the sources of funds, the nature of business, customer's business, and what constitutes a reasonable account activity, keeping in view the profile of the customer. So the financial institution is to establish whether the size of the transaction commensurates with the business of the customer or not. And who's your customer, and who are your customer's customer? I mean, his further distributors, his buyers of his products, or sell, and those suppliers of, and your customer's suppliers and your customer's buyers as well. I mean, both channels from in the chain, in fact. The financial institutions need to have written an explicit customer acceptance policy. They have to have a customer identification process, customer profile, risk classification of accounts. Obviously, it's on a risk-based approach. The risk management of the entire activity, and an ongoing monitoring of the account activity as well. I mean, you open an account, you do have a certain set of information provided at the outset, but during the course of transaction, over the period of a year, 2 years, 3 years down the line, you come across the transaction which do not commensurate with the business of the customer. So you need to have a certain ongoing monitoring of the account activity as well. So the financial institutions also are required to report on their cash and suspicious transactions, the CTR, the cash transaction reports, and suspicious transaction report to the financial monitoring unit, which has been established at the State Bank of Pakistan. In 2018 alone, we have witnessed an increase in the number of STRs, almost a 20% increase. But we have to see what happened. I mean, despite such increase in the number of transactions and reporting as well, what measures have been taken thus far? And the financial institutions obviously are reporting these to the financial monitoring units upon the FMU, and obviously upon the regulators now to take effective measures to check upon all those who are being used or being conducting these laundering transactions. So these are the KYC CDD policy. Includes 4 major things. This is the customer acceptance, customer identification, transaction monitoring, and an ongoing risk management system be in place to, I mean, sufficient processes need to be implemented to have an effective control upon all sort of the risks that the customers may pose to the financial institutions. Why these KYC and CDD being implemented? I mean, having sound KYC CDD policies helps the banks and financial institutions to check upon the risk of laundering as well. It helps to keep the integrity of the financial system, reducing the risk of being used as a conduit or vehicle for the financial crime and financial damage, and to safeguard itself from the financial damages. And also a deterrent, obviously, for the financial system, for the financial institution as well. as part of its sound risk management system to help it identify and limit the risk in the assets and liabilities as well. Then there is risk-based approach. For the high risk, you need to have a high enhanced CDD measures. For the lower risk, you have to have simplified CDD measures. You have to consider a couple of risk factors. There are customer risk factors. I mean, the customer, what sort of customers you have, what sort of a business you have, and secondly, the jurisdictional factor, the geographical factors. Certain jurisdiction pose a greater risk than the jurisdiction who are subject to more sophisticated reporting and legislative systems. Then product, service, and transaction delivery channels, obviously. A secured value card and wire transfer may be at core risk. Then financing someone for a vehicle. So this risk-based approach generally broadly covers primarily the identity of the customer, including its beneficial ownership, nature of customer business profile, and clients of customer, their location of the business, secondly, and thirdly, the products and services offered. So these are the risk factors which are to be considered while considering the CDD activity. Then we have the risk variables. The financial institution should take into account the risk variables as well, relating to those risk categories. These variables, either simply in combination, may increase or decrease the potential risk posed. This impacting the appropriate level of the CDD. Example of such variable include the purpose of an account relationship. I mean, why a customer is going to open an account. The level of the assets deposited by the customer or the size of the transactions undertaken. The regularity or duration of the business relationship. I mean, the longer the relationship, the more the satisfaction a financial institution may have on the relationship. Customer risk factors. The business relationship is conducted in unusual circumstances. For example, significant unexplained geographic distance between the financial institution and the customer. Yeah, because financial institution may be having in Islamabad and the customer is trying to operate it from, say, Karachi or Hyderabad. So it gives a sense of non-satisfaction to financial institution. I mean, why someone has been operating this account from distant places. Then, secondly, more risk is non-resident customer, the people living outside the country, yet they're operating in Pakistan. So this is another thing. The legal person or arrangement that are personal assets holding vehicles. There are legal entities which do entertain. There are legal persons who do entertain where you just park your assets in the name of businesses. The companies may have nominee shareholders or shares in bearer form. The businesses that are highly cash intensive. The ownership of the company appears unusual or exclusively complex given the nature of the company's business. High risk customer, non-banking financial institutions, these money transmitters, cash check carriers, full-fledged money changers, sellers of stored value cards, security brokers, dealers. These are high risk customers as denoted by the FATF. Travel agencies, property dealers, builders, professionals and consulting firms, exporters or importers of goods, cash-intensive businesses, including the retail stores, restaurants, gambling casinos. All of these gambling casinos are not present in Pakistan, but internationally they do have, I mean, the legalized gambling and casino centers. Second-hand car dealerships, offshore corporations, banks in secrecy havens, non-profit organization, charities. All of these are high-risk customers. So the financial institution, the banker needs to be extra cautious while developing a relationship with these institutions. So these are specifically designated as the non-financial business and professions by FATF, the casinos, real estate agents, the dealers in precious metals, the lawyers, notaries, and legal professions, including yourself as an accountant. These being, I mean, they have to have an enhanced due diligence while opening an account of an accountant with the financial institution, and of the lawyer or of the notaries or the legal professionals as well. And trust and company service providers as well. Then geographically, there are countries identified by credible sources such as mutual evaluation by the mutual agencies, I mean the FATF or the FATF style bodies, that certain jurisdictions have been subject to more incidents of money laundering, for which they do have the detailed assessment reports, and they have been following in with them, like that of Pakistan being grey listed by the FATF. So we are now being geographically a risky jurisdiction for money laundering. Countries, all those countries which are subject to sanction, embargoes, minimum issued, for example, by the United Nations or other agencies. Countries identified as having significant levels of corruption or criminal activities as well. Countries, geographical areas identified as providing funding or support for terrorist activities, or that have been designated terrorist organizations operating within their country. Then we have tax havens, those countries which do support investments and provide taxation. I mean, if you want to evade the tax, you want to have lesser tax, you can move to those tax havens. Then the shell businesses, registration and granting offshore banking licenses, protective and secrecy jurisdictions, countries with high degree of public corruption, so many, you have the list as well. Countries linked to terrorism financing, countries producing, facilitating transshipment and use of drugs, non-cooperative countries and territories as listed by the FATF in the blacklist. Obviously, these are those countries which don't cooperate with the FATF efforts or the efforts of the international community in combating this crime. So these are all non-cooperative countries. They are considered as the high-risk countries. All those blacklisted and grey-listed countries, obviously. Product service, private banking channels, cause private banking or the high net worth means the higher volume of the funds. So higher volume means the more funds move to the private banking channels, and these are the places where we have a greater risk of money laundering. Then anonymous transactions, which do happen in cash as well. Non-face-to-face business transaction, as this happened in our case as well, that the accounts were opened without having been in contact with the banking officer at all. The payment received from unknown and unassociated third parties, where you don't find any justifiable reason for the funds being moved from an entity to the account of the customer. Wire transfer, as discussed, because it has the velocity, it provides you access to your funds in seconds. You can just transfer your funds elsewhere in the world, and you can have good access of that as well. And likewise, your online banking, electronic banking, credit cards, store value cards, private banking relationships, correspondent agency banking relationships, Nostro and Vostro accounts, and bank-to-bank reimbursements. So all of these, from a banking perspective, financial institution perspective, all these products and services have a high risk of money laundering in them. The cross-border guarantees, bond contracts, you need to exercise a higher level of KYC in that. While entering into this sort of international transaction, a usual mean for the financial institution is to seek the beneficiary report from a credible agency, like, I mean, generally uses as a Dun and Bradstreet, which is being used internationally in providing information about different beneficiaries, different customers across the world. So they do provide commercial data, statistics, analysis of the beneficiaries. And obviously, if a shell company comes into their experience, having no empirically dealing or past experience of having any business, so the Dun and Bradstreet or any other relevant agency might be reporting upon that. So the banks can resort to these sort of beneficiary reports and third-party reports as well. Sorry. The remittance through formal banking channels, it's also being used quite widely for money laundering related crimes. These gateways, the wire transfers carry a high potential of risk of money laundering. These gateways facilitate wire transfers for customers of banks located anywhere in the world. the sophistication of AML, KYC and AML and compliance needs to be very high for this sort of business. We have to see the place of incorporation, degree of regulation and supervision as well, wherever we are incorporating these entities or wherever we are funding these, transferring the funds as well. I mean, it's from the perspective of the financial institution primarily. The originator information with the wire, I mean, where the funds are being originated and where they are going to transfer. Obviously, these are the basic information that you need to incorporate into the very systems of the banking financial systems. Then making payment to the beneficiary through bank accounts, keeping record of the transaction. The financial institution shall make a record of transactions to be able to refer to them in the future as well. Well, we do have in place a legislative framework, the Money Laundering Act 2010. It is then we have the National Accountability Ordinance 1999, Control of Narcotic Substance Act 1987, and Anti-Terrorism Act 1997 as well. So on the legislative front, a number of measures have been taken in Pakistan. The National Accountability Ordinance deals mainly with the detection and investigation, prosecution, and speedy disposal of cases involving corruption and corrupt practices. The following offence under NIR covers the offence of money laundering. What acquisition of any property, pecuniary advantage through corrupt, dishonest, or illegal means. Having assets beyond known sources of income which cannot be reasonably accounted for. And pursuant to section 20 of its financial institutions are bound to report suspicious transactions to NAB as well. So this National Accountability Ordinance 1997 empowers the NAB to implement, I mean, take the action against the corrupt, dishonest, and illegal movement of cash and funds, and for all those assets which are being where you don't find any source of income. Then we have Control of Narcotic Substance Act 1997, which covers the AML measures, I mean, makes the acquisition of assets through drug money an offense. The suspected properties assets may be frozen and subsequently forfeited through the code. This measure can be construed as an anti-money laundering measure. Then section 67 is mandatory for the financial institution to report STRs to ANF, the anti-narcotics force, the suspicious transaction reporting to the anti-narcotics force as well, suspected to be related to the drug business. Anti-Terrorism Act deals comprehensively with the offences of terrorism and financing of terrorism. Makes compulsory for the proscribed organization to submit all accounts for its political and social welfare activities and disclose all funding sources. So under the Anti-Terrorism Act, one can have, I mean, the freezing, seizure, and forfeiture of assets is possible. Anti-Money Laundering Act provides for the prevention of money laundering, combating financing of terrorism, and forfeiture of property derived from or involved in money laundering or financing of terrorism or for the matters connected therewith or incidental thereto. So it does not restrict it to the money laundering, but all matters incidental to it as well. In June 2018, the Securities and Exchange Commission of Pakistan has notified the Anti-Money Laundering and Countering the Financing of Terrorism Regulations 2018. These regulations are fully compliant with the Financial Action Task Force recommendations, which are mandatory to adopt for Pakistan as a member of the Asia Pacific on money laundering. So now being the apex regulator of the corporate sector and capital markets, it has issued these regulations. Obviously, the regulations being the entities have to comply with them and have to report upon them. The State Bank of Pakistan, the banking sector regulator, has also taken a number of measures in the AML and CFT front. The institutional arrangements include the setting up of a dedicated AML CF units with the financial institutions, the capacity building and training of all the staff working with the banks and financial institutions. The regulatory framework has been implemented through the issuance of prudential regulations. And there's an ongoing monitoring and enforcement. Does it through the on-site inspection as well as through the off-site surveillance. International obligation UNSC resolution, freezing of account, it does freezes the account subject to the UNSC resolutions, and curbing of informal value transfers, the Hundi and Hawala business, the informal funds transfer business has now been formalized. The legislative, the regulatory cover has now been provided. Exchange companies have been brought to the regulatory net as well. And it also has worked towards the documentation of the economy. Therefore, the documents, the instruments like rupee traveler checks and their instruments have been wiped off from the economy. That State Bank has now abandoned the use of the RTCs further. So for the financial institutions overall, what they need to, the broader financial institution needs to have a board management level oversight on the AML risk primarily. The board level committees and the high level management should have systems in place and keep an oversight on the AML risk primarily. The financial institution is to appoint a senior level officer as a principal officer with adequate authority and resources at his command as an anti-money laundering reporting officer. The systems and controls to identify, assess and manage the money laundering risk, reporting to the board on the operational effectiveness of systems and controls, and appropriate documentation of the risk management policies, their implications and risk profiles. So the reporting, yes, STR reporting and CTR reporting is one form of documentation, and your account opening and the acquisition of the sufficient information from whosoever intends to open an account is one such thing towards this end. Appropriate ways to ensure that AML risks are taken into account in daily operations. That is, you have to have sufficient systems, sufficient technological systems in place to help you, to enable you to identify those transactions being used by the launderers by constructing complex transactions. Therefore, the systems must be able enough to extract those out of the usual transactions. So the development of new financial products, you have to take into account, the financial institutions have to take into account this AML risk predominantly while developing the new financial products, establishing new business relationships and changes in the customers' profiles. And also in the staff hiring, because one person, I mean, if a launderer is able to place one of its guy into your system, your entire bank, your entire system is then would be at risk. So primarily the hiring and then a focused training of the entire lot of the banking and finance professionals is also very important to curb this menace. And then a timely reporting of this suspicious transaction reporting. The timely reporting enables the law enforcement agencies to take effective measures, I mean, effectively and speedily, in fact. Just to conclude, I mean, this is just the latest. That despite the factors, the FATF is still we are still hanging in balance as far as the FATF is concerned. This is the latest about. Despite expressing satisfaction, Pakistan submitted report of section action plan. FATF also observed that the Federal Investigation Agency at federal level and counter-terrorism departments and provincial levels were required to enhance their capacity as well as coordination to investigate and prosecute cases of terrorism financing effectively. So despite having all these measures in place, and yet FATF has a certain observation on the ability of our Federal Investigation Agency and the provincial departments as far as the terrorism financing is concerned. So thank you very much. The house is now open for any questions. If you have any, you're welcome, please. Thank you. Harun, are you there?
Yes, right here. Excellent session, Junaid, and members are very appreciative. Iman is also on the line. Iman, can you take us through the questions? So if you can start from the beginning. Members have been posting questions throughout the session. So let's go very quickly over the session, the questions, and anybody who has further questions can type them in the questions dialog box. Iman will have to be very quick because we've only got five minutes left. Junaid, if you can do a rapid fire of question and answers, and that'll be very useful. Can you hear Iman? I don't think so.
I'm not.
Okay, let me ask questions in the meanwhile. The first question was Mehnaz Nayani's question. She's saying, what are the key compliance requirements for NGOs with respect to AML/CFT?
Key compliance
From an NGO perspective.
All right. The AML as well as the AML regulations. The AML regulations which have been issued by SCCB, they provide a comprehensive mechanism which these non-profit organizations needs to institute. On the recommendation of Securities Exchange Commission, a number of NPOs by now have been delisted from being regulated entities. Now the number has been squeezed. So it's a bunch. It's a complete list. You can just refer to the SCCP regulations, and you will find a great detail about these. Those specifically catering to the NPOs, their businesses. How they can fund their operations. They have to provide the details where they are generating their donations, where they are deploying those funds. So they have to provide complete details of their bank accounts as well as of their financial statements to the regulator. Yes, please.
Yes, next question by Waqarul Hassan. He's saying, can a country mold the FATF as per its requirement? And another question from him is Pakistan a part of FATF?
Pakistan itself is not a member of FATF, but Pakistan is a member of APG, which is Asia Pacific Group, which is a FATF style body. And APG is a member of FATF, but because FATF is a global body, it implements it through its regional organizations as well. So despite Pakistan not being a direct member of FATF, Pakistan has to comply with the APG and all of the recommendations which have been given by APG, because APG itself implements all those recommendations given by FATF. So, by one way or the other, we have to comply with the recommendations of FATF. Yes.
Okay, next question is from Kashif Kamran. He's saying integration can also be defined as once the illegal money has become legitimate part of the economy and it's difficult to differentiate between illegal and legal. Is that true?
Primarily the purpose of integration is to present the money earned through illegal sources as a legitimate one. So this is, primarily this integration stage comes at the third stage, because when a launderer needs the funds back to the place where from it primarily transferred the funds, because he needs those funds back to the place where he wants to use it. So integration is the stage from where the funds are, obviously they keep and remain within the financial system, and they do find it back to the place from where they were originated for the use of the launderer, in fact. Yes, please.
Okay, Amir Amiruddin is asking, sold to party and shipped to party, is this the part of money laundering?
Sold to party and shipped to party. Can you? I need further elaboration on the question.
Yes, Amir, if you can elaborate your question. The next one is from Waris Ahmad Khan. He's saying, in your opinion, are cryptocurrencies some sort of money laundering scheme? I do understand that it has been banned nationally, but how FATF and other international AML bodies looking at it?
Yeah, this is the topic that has gained more prominence these days, the cryptocurrency as well as the blockchain as well. Since these cryptocurrencies have been used by the launderers, because they have the potential of placing large, what I discussed is the volume, the greater volume can be placed in this cryptocurrency. So the FATF has issued a complete guidance on these cryptocurrencies. So you can just refer to the FATF website, a complete guidance. It's almost a 44-page document there. You can have a complete detail about the use of the cryptocurrencies.
Okay, Osama has asked a political question, but since we are not, this is not a political debate, so we're just ignoring his question. We're going on to Shehroz Raza's question. Is saying, I can imagine about the implications of not following the policies about AML and FATF, but my question is regarding the credibility of the institution controlling or establishing these policies. How credible are these in your opinion?
If he's talking about the local institutions, then obviously institutions are developed by and through the legislation as well. They do get the legislative approval for the establishment, like that of being. If you talk of the NAB or any other institution, obviously the financial monitoring unit as well. These institutions are established through a certain legislative process as well, and have the powers of enforcement. They can, do whatever within their domain to curb this menace. They have been given sufficient powers. Now, to what extent they are being successful in their drive to curb this menace, obviously, you see this is a global phenomenon. No country you can identify a single country, or when you see that the biggest financial institutions in the world, they have been subject to money laundering. Then how can we say that a country like that of ours is safe from it? So we are placing our reliance on our institutions. Obviously, with the passage of time, these institutions will develop and they will control this menace, obviously. So thus far, they are doing quite a good job as far as the things are concerned. The institutions have the power. They have been given through the legislation. They can implement it.
There are quite a few comments from members, including Hafiz Muhammad Yasir, Muhammad Shoaib, Ali Farooq, Muhammad Kashif Makbool. They're all saying phenomenal, fantastic session. So that's praise for you, Junaid. There is a suggestion by Muhammad Kashif Makbool. He's saying, please arrange a full session on trade-based laundering.
Agreed.
So
I second this.
All right, so you're next, coming up next on trade-based money laundering. There are a few questions about the certificates, and as I mentioned in the beginning, the certificates of participation will be issued through email in the next 2 days, and they will come to you in your email box from my side. Amir Riaz is asking a question, is there any country who is blacklisted by FATF?
Yes, there are two countries. I just shown Iraq and Vanuatu. I don't know whether I can really pronounce its name. It's Vanuatu something. VNAU. There are two countries, Iraq and this one. So these two countries are presently on the blacklist of the FATF.
Okay, next Pakistani is by Amir Riaz. Sorry, go on.
Yeah, please.
Amir Riaz is saying, Isa Malik is saying, how to combat state-funded terrorism? I think that's a terrorism question.
It's beyond money laundering, in fact, because state terrorism is it's outside the scope of the FATF. In fact, you have to go to the United Nations for this very thing. You have to go to the United Nations Security Council for this very matter, in fact.
Okay. Ifan Chotai is saying, what are the chances of Pakistan avoiding blacklisting by FATF?
What are the chances? As far as the regulatory side is concerned, the two regulatory system, the SCCP as well as the State Bank of Pakistan, they have taken a number of measures. The new regulations have been issued, the new legislative measures have been taken. Amendments have been done in a number of laws as well. So the regulatory side is quite okay, and FATF has expressed its satisfaction on the regulatory side. When it comes to the law enforcement side, when it comes to the financing of terrorism, then they raise their eyebrows on the ability of our uh, law enforcement agencies, like that of federal investigation agencies and its provincial counterparts as well. So as far as the financial system and financial sector is concerned, the corporate sector, the capital market is concerned, they seem to be quite satisfied with the regulatory implementations thus far. But obviously, they have reservations on the law enforcement side.
Okay, Junaid, there are more questions coming in, so we'll have to be very quick. Atika Heather is saying, are there any other ways identified for trade-based money laundering except for under and over invoicing? How can compliance department of a financial institution highlight trade transactions, highlight if the trade transactions are genuine?
It's a whole lot of things, because you have to have a complete KYC and CDD measurement in place primarily from the very ab initio. You need to have a full 360-degree analysis of your customer. If you are able to do it, I mean, as a debtor at the initiation of opening an account, then there are lesser chances of entering into a business, an account with those who have been intending to use the banking channels for money laundering. So the trade-based financing, if you have historical record of dealing with the businesses, say over 20, 50 years, you need not to worry about that, because this laundering things generally happens with the new businesses, with the new entities, with the new customers who come into contact with the bank for these very transactions. A genuine businessman would, a genuine entities doing the business who have been doing exports and imports for the last decades, they will never be opting for the money laundering in any case. But obviously, the new customers, the launderers, they make shell companies. They do open their account with the financial institutions, and then they devise various schemes. The import and export, I mean, the overall invoicing is one form of a thing, but there are other contracts. I mean, the guarantees as well. The cross-border guarantees, they do have the element of the trade-based guarantees, the contracts, the bid bonds, the performance bonds. So all of these agreements in between the business of one country to the other country has the potential for money laundering. So the trade and these business transactions can happen in a number of ways. You cannot just limit it to, say, import. I've just shared with you the areas where there is more incidence of money laundering. I mean, the over invoicing and under invoicing is the place where we find more incidents. But I'm not negating that there aren't other areas which cannot be used for the money laundering. So there are all host of things, businesses and channels that can be used still by the launderers.
Okay, Waqas Ahmed is saying you've been talking more and more about asking the source of funds from customers, i.e. know your customers in a bank. But I saw that customers just say, why are you asking the source of funds, etc. So how can we motivate customers in this regard?
Okay, what you need to do is primarily to impress upon the customers that it's a legal requirement that you must declare your, I mean, if I'm a genuine customer, why would I hide anything about my business or personal affairs? Because I'm opening an account with the bank, I have to move the funds through the bank, I have to do all the transactions through the bank. So I'm very much able to, I mean, I have to pay the fair taxes. If I'm paying fair taxes, if I'm a genuine businessman, I won't be hiding anything from the bank or from the tax authorities at all. But if, there's a big if, obviously, if I intend to use this bank account for any other purpose, then I'll definitely be, my first focus would be to hide the things from the bank as far as I can. So wherever a customer tries to hide the things, you just find the thing that their germ of money laundering should be there.
Okay, Mehvish Mehman is asking, NECTA has issued a safe charity list. What is the procedure for a not-for-profit organization to be a part of NECTA safe charity list?
Safe charity risk? uh, list, sorry.
NACT list, yes, safe charity list, a
It's
list
okay.
issued by NECTA.
Yeah, very simply, that's why the regulator always issues the list of those entities with which you can deal. I mean, it means those institutions have been tested, they have been checked by the regulator. So if the regulator or any entity has been, the regulatory body or a government controlled entity is declaring a list of known entities which you can take them as the known charities, then you should avoid dealing with any other entity which is posing itself as a charity. So for the law, these entities, the list of whom has been declared by NACTA is the recognized entities by the law of the land.
Okay, Mohammed Zaki Akram is saying, can we have a recording of this session for future? And yes, the session has been recorded. The links for recording will be shared with all the attendees and the non-attendees through their email. Kamran Aslam is saying, if Pakistan is not a member of FATF, then why do we have to follow their instructions? As in, if we don't, we will be face sanctions.
Reply that. Because should I say it again? Because I already replied to this sort of a question, in fact.
That's right, that's right. So Amir Riaz is asking, is an auditor responsible for any act of money laundering by a client? What are the responsibilities of external auditors against money laundering?
Yeah, because I mean, when it comes to the overall risk management system of a financial institution, then be it an internal audit or external audit, both of the team, the internal auditor as well as the external auditor and the entire management, the board as well, they are responsible for the risk management of the institution. The auditor is presumed, the external auditor is presumed to report upon what? Upon the material transactions. If a transaction is material, the auditor is supposed to report upon that. And we can see if a penalty of 8.9 billion is being imposed on a bank, then how can we say that external auditor was aloof to the transaction? So he is presumed to provide the fair information and to disclose, I mean, to report upon whatever is material to the bank. So if any money laundering act comes within the financial, operational, legal, or other risks. So it's the responsibility, I presume, of the external auditor as well to report on that.
Yes, and I think a few days ago there was a rumor on social media that two partners from a big four were asked to step down because of negligence over money laundering, which turned out to be fake later on. But you're right, it is the responsibility of the management as well as equally the management responsibility of external auditor. Ammar Manaf is asking, how can the accountability process arise from individuals or groups of individuals if they use their money laundered and invest in tax-free areas such as agriculture or cattle farming? These types of havens exist in Pakistan as well.
Well, it depends, because there are sectors where you can park. I mean, it's not restricted. Any economy which is undocumented, any economy which has no sophisticated financial systems in place, there will be a potential for the launderers. The weaker the laws, the weaker the systems, the launderers would be having the opportunity to find it. If any country, I'm not even saying, even if Pakistan has those sectors which are not documented, I mean, what to talk of a country where we are having, say, 250 million of the population and less than a million of the people pay the tax to the exchequer. So there is a whole lot of the people who don't pay the taxes as well. So even, I mean, when you go to the FATF's, particular recommendation, I mean, they do consider this tax evasion as equivalent to money laundering as well. So wherever a person is evading a 1 rupee in taxation, that also amounts to the laundering of money. So all those countries, all those economies with weaker systems in place, undocumented undocumented economies, they have the potential for the launderers to purchase land, to purchase property, to invest in agriculture, to invest in technology, or elsewhere, wherever the sectors they find it. I mean, the real estate also it's on the high risk areas of FATF as well. So,
Okay, Muhammad Shafiq from south of Sudan sends his greetings. He's attending your session from there. Thank you, Shafiq. I hope you found the session useful. Just a couple more questions left, and we are heading towards the end. There are a couple of repeat questions. So, Fiza, your question has already been answered. Salimuddin Jalani is asking about FATF and Pakistan coming out of it successfully. We have answered that already. Shehbaz Akbar is saying, what are the course of actions taken by government of Pakistan, especially for non-regulated sectors such as real estate? Further, what steps will be taken by regulators, especially SECP, to implement effective AML regulations? A very quick answer if you already answered this, but you may want to take a shot at it again.
For the real estate sector, SECP has in place the REIT regulations, the real estate investment trust regulations, and because I mean the real estate sector is a place where generally find more. I mean, because it has the ability to absorb greater volume of the launderers fund. This sector has remained a bone, I mean, of contention between the regulators as well. I mean, because this sector was predominantly not regulated to a greater extent, but now, I mean, to regulate to a lesser extent, the regulations have been issued by SECP, and there are other measures which have been taken to curb, I mean, the investments in the real estate. The taxes have been increased to a great extent, but I don't find, I mean, one particular thing where you can say, okay, this regulatory development has been done specifically towards the real estate sector. Let's see, in the days to come, we're likely to see further developments in the sector. I do hope.
Okay, Mahwish Mehman is saying, do you think non-cash based economy can help in countering money laundering? Non-cash based.
Yeah, obviously, the more you move towards the sophistication, the more you use the technology, the more you'll be able to, I mean, the more sophisticated your economy is, and if the things and the transactions are happening on the system, obviously they'll come to the eyes of the regulator, to the financial system as well. So, I mean, the one thing to document the economy is to remove, I mean, to reduce the use of cash. You can do it through the different channels, the online channels, through the cards system. I mean, you can have the blockchain. The blockchain at service, I mean, as far as the technology is concerned, can be used quite productively to bring the entire economy, I mean, to document the entire economy as well. So, I mean, it's my personal experience. We had a meeting with the FBR as well, and they are working on it to bring the entire, I mean, to increase the documented side of the economy. So she's very right in that aspect. The lesser the cash usage of the cash, the larger potential you have to record the things. The more you record the things, it will be visible to the regulators, to the financial system as well.
Okay, now there are two questions and I'm going to merge them because they are similar. Shehroz says he does not agree with us regarding the responsibility of auditors if he finds such a thing or has a suspicion under obligation. At the same time, Vikas is saying if external auditors are responsible to ensure there is no money laundering, why the auditors of HBL turned a blind eye on this?
As I've said earlier, that external auditor has to report anything which is material. It must share it with the stakeholders through its audit report. So anything material which comes to the knowledge of the external auditor, he has to share that. So if a money laundering transaction involves a material risk for a financial institution, then it must be brought to the light. It must be shared with the stakeholders, obviously. This is my point of view.
Okay, and the final question, sorry, there's one question from Shafiq. And Shafiq from south of Sudan, he's saying, how can a business educate its customers about money laundering? Because in our country, many people don't even know about the word money laundering. I mean, he's referring to Sudan, not Pakistan.
Well, but you have seen that in greater of the cases where we have witnessed these monetary penalties, the Sudan was one of the countries where the financial institutions and financial linkages were used to launder the money. So Sudan obviously is one of the countries where we have a high incidence of money laundering as well. So money laundering obviously is a global phenomena, and ignorance of law, ignorance of anything is of no excuse for anybody. So money laundering, I recommend him to refer to the FATF recommendations and just refer to the website, have a feel of what money laundering is and how his country, his economy, his business are exposed to this very phenomenon.
Great. I think that's all. Final comments from Ijaz and a few others. And there are more questions coming in, but I think we've run out of time now. So you can send in your questions directly to Junaid and probably find time to answer them. Thank you very much, Junaid. And this was a very informative session. I think we touched about 400 people in the audience, throughout the session. Which is phenomenal. I think there is desire and hunger for more sessions on the subject, considering this is a very, very topical and it's a topic being currently debated and discussed a lot. Thank you very much, Junaid, for your time. Thank you very much for coming over and talking to the members, and we'll hope that you'll take out time in future also and talk to our members. Thank you so very much. Thanks a lot, and thank you all the participants for making this a very, very interactive session. So many questions still coming in. But thank you so very much. We really appreciate your participation. Thanks a lot and goodbye.